Hi, I'm Ian Clark, Head Actuary and Vice President at ICBL. An endowment plan is a life insurance policy that provides death benefit protection, first of all, and it provides savings to the client. The difference between that and what people know of a whole life plan is that the savings comes back to the client at the end of the endowment period. So, for example, if you have a 25-year endowment, not only would you have death benefit protection for 25 years and some cash value accruing, at that 25-year point, you actually get a lump sum. Well, that's the thing. The thing about the endowment plan in particular, our series, is that it has a range of options that caters to a wide variety of customers. So you have the 18-year endowment, which is specific towards parents looking to provide some kind of lump sum payout at the 18-year point where perhaps the kid is going to university or they want to give the kid a gift at the end of their initial school life. You have your 25-year endowment, which is more geared towards longer-term investments. Individuals who are looking to perhaps retire early, to retire with a pot of money at that 25-year point. And then obviously your endowment is 65, which is really targeted for the retirement audience, where, as you know, there are challenges with securing retirement benefits right now. And so that provides the option of accruing benefits that will pay out at age 65, giving you a lump sum that you can use to travel the world, to give yourself a pension, to give to family members. So that's the range of options that this suite offers. Definitely the endowment is 65. The reason being is that the individual is 27. At that point in time, insurance is relatively cheap. You can add a cost of an insurance premium to your regular commitments, not an arm and a leg, for example. What that does is that it actually gives you a very strong return because you're investing over a 38-year period of time. And at that point in time, your long-term returns will be quite healthy. So you can rest assured that while you're paying a little every month in your salary, you're actually going to accrue quite a significant retirement benefit. The added advantage is that since it is a relatively small amount at that young age, as your commitments increase over your lifetime, you want to buy a more expensive car, you want to get a mortgage, you get kids, it is still sustainable. And so you've already secured that long-term safety net while planning for other events that may happen along the way. It would be an excellent gift to give to your daughter and son-in-law. And there are actually two ways of facilitating that gift. The 18-year endowment is the obvious answer. You want to give your grandchild that payout or that secured benefit at age 18 when they're planning to go to college. The other option is the 25-year endowment, whereby you can give the grandchild a gift at age 25. They can use that to look at purchasing a house, starting a business. So there are two options really for that scenario, and obviously that will depend on what you're trying to give to your loved one. Okay, so the Cash Plus add-on is a feature of our Sapphire endowment plan available on all three plan options, the 18-year, the 25-year, and the endowment is 65. What it does is that it allows you to level up on your investment return, your long-term investment return. So whereas the base plan gives you a pretty healthy return of around 3% or so depending on the client, the Cash Plus allows you to pay in a bit more and increase your overall investment return. So that when you're at the end, having utilized it, your ultimate payout looks a whole lot better. Oh, there are a host of reasons why Sapphire is a cut above the rest. So starting at the premium value, it is basically best price on market for the respective endowments that we have. Secondly, the cash values, which is a major component of what attracts individuals to a life insurance policy. Our endowment cash values start a whole lot earlier than the competition, and they accrue at a faster rate. And then ultimately, your returns at the end of the period are also better. So long as you keep your policy to maturity, your actual overall investment return over the lifetime of the policy is superior. It is certainly a cut above the rest in all aspects. So the fact that cash values accrue faster, you can loan against your cash value, which means that because it's accruing faster, you have a larger pot of money at any point in time to access for a loan. So it gives you greater flexibility. Securing a loan from your insurance policy is usually a faster process than going through other channels. And so ease of accessibility, better availability of loan amounts to be secured, and ultimately your benefit is still protected so long as you remain within the loan parameters, and you can still get your payout at the end, subject obviously to any deductions for the loans that are outstanding. In simplest terms, it gives you a better return. It provides death benefit protection to your loved ones should something happen to you. It provides income protection in terms of access to loans throughout the life of the policy. So whereas on a savings plan, you can only look at the savings plan for that single element, the wrapping of the Sapphire Endowment provides a host of benefits that make it superior to a simple savings account. Well, the Sapphire Endowment Plan is an excellent wealth generation option because of the return that it gives you over the endowment period. The returns that we're offering up to 3% on the base and up to 5% on the Cash Plus add-on are superior to any other investment options available currently. And so for you, that is the option, that is a choice to make. In simplest terms, because you want money through your lifetime, within your lifetime. The endowment plan, the structure of an endowment plan means that at the end of the endowment period, you actually receive a benefit, a living benefit, which is different to the whole life plan and the term plan, such that you have to die. Your beneficiaries will get the money. So if you're looking for a pot of money to use within your lifetime, the endowment plan is the option for you, and by extension the Sapphire endowment plan is the option to choose.